Welcome back. You're still tuned into Mid-Cap Radar. Well, Max Estates is the stock on our radar on the back of their fourth quarter numbers. Company's lease rental income has come in at a 4-year high in FY24. The company aims to double the same in FY25. In the quarter gone by, in quarter one of FY25, there have been a lot of updates in terms of fundraise and new residential projects as well. So let's discuss that. We have Rishi Raj, the Chief Operating Officer of the company, joining us now to discuss that. Good afternoon. Thank you so much for joining us. Well, can you give us a sense of the residential bookings in quarter 4 and FY24? Because you've given targets of 4,000 crore rupees in FY25. But what was it like in quarter 4? And is that something that you can continue to do in quarter 1 of FY25? Or you think things will improve from here on?
Good afternoon. Thank you for having me in your show. Just to recap for your audience, we at Max Estates are in Delhi NCR in premium commercial and residential. As far as your question for residential is concerned, in FY24, we successfully launched our first residential project in Delhi NCR in Noida called Estate 128. And there we booked 1,800 crore in FY24. At an average price realization of 18,000 rupees per square foot, which was unprecedented for market like Noida. So that's FY24. We have built our residential portfolio and we have added in our residential portfolio 2 more projects in Gurgaon. One is a joint development that we did last year on 12 acres of land on Dwarka Expressway, a very prime location, well connected with Gurgaon and Delhi. Our approvals are on track and we will be launching it in July of this particular calendar year. For that, our guidance to the market in terms of booking value is 4,000 crores. Just to add to that, we have added another 18 acres of land in Gurgaon, contiguous to this 12 acres of land, again on a joint development route to keep expansion in a relatively capital light way. That 18 acres gives us another 4 million square foot. And the gross development value of that, the potential of that is 9,000 crore plus, which we plan to launch in the subsequent 2 years, in 26 and 27. So in summary, the total booking value potential of our residential portfolio today as we stand is approximately 15,000 crores, of which 1,800 crores for our Noida project is already booked, which is under construction now.
Right, Mr. Raj. So 1,800 crore in FY24. FY25, you've given a guidance of 4,000 crore. Now 4,000 crore, now you also said that this is in a joint development. So what would be your share in this? The other part of the question is there's this particular project, Estate 360. Have you factored that in as far as the guidance is concerned? When do you expect to launch it?
So as far as when you say Estate 360, this is the project that we are going to launch in July of this year on 12 acres of land on Dwarka Expressway. The guidance of 4,000 crore includes the share of landowner. The revenue share is roughly 1/3, 2/3. 1/3 belongs to the landowner.
Okay, so 2/3 will be for Max Estates. Yes, please go ahead.
2/3 will be for Max Estates. And the new acquisition that we announced over last couple of weeks, which is an addition of 18 acres over 12 acres in Dwarka Expressway, on Dwarka Expressway in Gurugram, that has an additional GDV potential of 9,000 crore plus.
Yes, that is something that you have informed to the exchanges as well. Mr. Raj, I wanted to understand the fundraise in that context because that was another event that the street seemed to like. Will all of that fund be used in the residential projects that you've spoken about, or some of it will go to commercial as well? Over how much time period will you be utilizing those 400 crore rupees?
Yes. So let me just share with the audience about this fundraise. This is from New York Life. New York Life, which is a leading insurance player from US, has been a strategic partner in real estate business since we started our real estate business back in 2016-17. They are 24% shareholder in the list co, and they are 49% joint venture partner in our commercial office platform. The most recent announcement was related to they buying 49% stake in two of our rent yielding grade A plus operating asset, which is Max Towers and Max House. With this, they are now a platform partner across all commercial office portfolio of 4.5 million, some delivered, some under construction. The total investment from this is around 388, around 400 crores that you mentioned. And this will be one of the many sources that we will be using as a growth capital to fund our growth moving forward, both residential and also in future commercial. The 400 crore that we are talking about will be used in the residential growth opportunity that we are planning over and above what we have already announced, which is the 18 acres. Over and above that, we will be using this 400 crores in the coming months.
Yes, Mr. Raj, we got that. We also want to ask you about the lease rentals and what is the kind of income revenue stream that you're seeing from that particular vertical. Total lease area of close to 0.91 million square feet, with lease rentals of close to 66 crore. FY25, how will that number pan out? Number two, you have a partner on board as far as the commercial assets are concerned. Will you also in the future look at creating a platform and go via the REIT route or back to the markets?
Yes. So first, coming on the lease rental income, in FY25, we are expecting lease rental from our operational assets to be in the tune of 120-125 crores. But I would also like to share with your audience that when you look at 4 to 4.5 million square foot of portfolio that we have on the commercial office front, 3 delivered, 2 under construction, 1 in Gurgaon, 1 in Noida, the total annuity income potential at 100% occupancy is in the tune of 450 to 500 crores.
So that will be by when, Mr. Raj? 450 to 500 crore rupees?
By FY29.
By FY29. Okay. And right now, what is the split between residential? Yes. And right now, what is the split between your overall portfolio between residential and commercial?
So now we have 12 million square foot of total portfolio, of which delivered and under construction commercial is 4 to 4.5 million. Rest, including the new acquisition of 4.4 million square foot of residential that we announced, is 7.5 million square foot. And coming back to the question on how are we thinking of partnerships on the residential front, we are very open for all 3 models: outright purchase, joint development route, and we are also open to bring in New York Life kind of a partner for co-investment in a residential portfolio moving forward.
If I could just quickly interrupt you, any plans for a REIT? I think we just missed that.
Not yet. It will be one of the many exit strategies that will be available for us for our commercial portfolio. Today, our focus is to build a scalable commercial office portfolio. As I mentioned, 4.5 is what we have. We will continue to build, and at the right point in time, decide for the exit at a portfolio level through multiple choices that we may have at that point.
Thank you. Thank you so much for your time, Mr. Raj. Explained to us very clearly, how you expect FY25 to pan out. But we've run out of time, for this particular interaction. We'll have you once again post the Q2 results. But that's all the time we have on this edition of Mid Cap Radar Mutual Fund Corner when we return.